Good afternoon again, friends from the media. Welcome to our second round of press conferences for today. We have here very special guests who will talk about the overall topic of financial integration, which is, of course, as we all know, is one of the 4 pillars of the Cebu Action Plan, a roadmap that is being pushed by the Philippines to be adopted by our fellow APEC member economies. And as on the issue of financial integration, of course, there are prerequisites in order to achieve financial integration. In simpler terms, financial integration is simply linking the financial systems of APEC member economies so that there will be easier flow of investments and trade, and of course, with the overall with the end goal of boosting job generation and incomes. Now, what are some of the prerequisites? Those include the establishment of credit bureaus and having movable collateral registries. Our resource speakers will explain some of those in a bit. And then side by side with the agenda of financial integration is the agenda of financial inclusion, which means it is the objective of ensuring that the majority of the population has access to credit and other forms of financial services. So our resource speakers for today, 2 of them are from the International Finance Corporation, Mr. Colin Raymond, who is the advisor on Credit Bureau, and Ms. Griselda Santos, who is the IFC Operations Officer. And we also have Ms. Pia Roman-Tayag. She is the head of the Inclusive Finance Staff of the Bangko Sentral ng Pilipinas. So we're going to ask each of them to give a brief statement on the developments in their sectors, and then we can open the floor to questions. Perhaps, yeah, Ms. Griselda will start.
So I guess I want to start by explaining what secure transaction reform is. So when you say secure transaction reform, it's more of movable collateral reform. With that being said, it's very important because MSMEs do not have the hard collateral that's generally accepted as a collateral by the financial institutions. So with that, there's lack of access to finance among MSMEs. Much has been done in various APEC economies like Vietnam, Australia, Cambodia, in terms of coming up with the registry as well as the reforms, but there's more that can be done. So basically, we're pushing for a true comprehensive secure transactions reform. When you say it's a reform, there are 3 elements. 1, a central registry. We have a wrong notion that a reform ends with a registry. A registry is only one of the 3 elements, which has to be publicly available information on movable collateral. Secondly, we have to have the right legal reforms as well as infrastructure that sets clear priority in terms of enforcing the rights as it relates to movable collateral for secured creditors. We have to have a broad, the law should allow a broad range of acceptable movable collaterals. And then, of course, we should have the political will among the legislators and government to really push for the reform among the financial institutions and increase in confidence in terms of lending based on movable collateral. And for the public, we should have a parallel effort to have financial education as regards to responsible borrowing to reach out to the MSMEs as well as the consumers.
Thank you, Ms. Griselda. Who would like to go next? Mr. Colin?
Do you want me to go next? Okay. Just want to share a little bit of information about credit information bureaus, but maybe before I go into their importance, let me just explain what a credit information bureau is. It's really a repository of information about your credit behavior. So when you're paying your bills, for instance, you may have a telephone bill or you might have a credit card, that information is then recorded by your lender and it's shared between all of the credit providers in that country. So you have a central repository, a national repository that has information on all of your credit payments and all of the missed payments as well. So the idea is to have comprehensive information on any borrower so that all of the positive information like the defaults that you might have are also recorded. And the idea is to get a comprehensive as possible across all lenders. So some countries you may have it only for bank credit, but the ideal situation or the benchmark situation, best practice situation is you have it for all lenders across all providers. So for example, you'll have it for your credit cards, for your mortgages, but you'd also have it for any finance that you might have on a motorbike or any home goods. You may have it on your phone bills, on your utilities, water, electricity, etc. So by having this repository in place, it really helps two things. One, it helps lenders to be able to find out when you're going to apply for credit or you're going to get further credit extension, so they can judge or they can assess how much capacity do you have, how much exposure do you have, and therefore can they lend you more. And the other aspect to that is, which is an important one, as borrowers, this is an important way of you being able to build what we would call a reputational collateral. You may not have physical collateral to offer to the lender, but by your good repayment behavior in the past, you're able to then show by your reputation that you've paid your bills on time. So therefore they may be able to offer you credit based on reputation rather than having physical collateral. Now, across this region of Asia, there's quite a whole range of economies that have both what we call credit bureaus or registries in the public sector, and some that don't. Here in Philippines, there's a development underway, as you may know. The Credit Information Corporation is being established to gather this information on a national basis from all providers, all regulated and non-regulated entities, to then make that available to private credit bureaus to then be able to provide that to lenders. So this information is going to be available to all lenders and all consumers as well. And the important aspect as a consumer, you have to be able to also find out what information is being held on you. Is it correct? Is it up to date? So there's usually a process that enables access to that information, and if you have any complaints or if there's any errors, then there's a dispute resolution process that is available to you as a borrower. So as far as the economy is concerned, these are very important pieces of financial infrastructure, similarly to collateral registries. Credit registries will help access to credit to increase, because then lenders can know who to lend to and who not to lend to, or to prevent over-indebtedness as well. So these are important components from borrowers like you and I, or for small business, to be able to get access to credit more easily because of this flow of information in the economy is available to all. So that hopefully gives you a bit of an overview.
Thank you, Ms. Pia.
First of all, thank you for this opportunity to meet the press, our friends from the press. From those, the provincial press, I'm actually also from Bataan, so I'm happy to be here for this event. What I discussed in the session that just finished was on financial inclusion. And this basically means just having access to a broad range of financial services for all Filipinos and for all in different economies. And why is that important? Access to finance is important because for an individual, it helps them manage their finances. If you have savings or if you have access to a loan, if you're a business, if you have access to credit, you can expand. So on a household and firm level, it's very important. Access to financial services is also important in terms of the financial system, where it can provide, open up savings accounts, broad-based savings accounts to many people, and channel that to productive activities in lending it to businesses, for example. So it can also contribute to broad-based and inclusive growth. And this is really the work that also the Philippines is looking at. In fact, very recently, an interagency body convened by the governor with also 12 other government agencies approved a national strategy for financial inclusion. And this is set to be launched early July. And what it mainly means is that we need a national and collective effort towards ensuring access to financial services for all Filipinos. And this strategy will be based on we'll look at 4 areas: policy and regulation, financial education and consumer protection, advocacy programs, and data and measurement, because we don't want it to be just another strategy, just another document. We want it to be something that we can measure to really make sure if we are making progress. And in financial inclusion, in fact, the Philippines is somewhat considered a global thought leader in this space because of our work in microfinance, for example, bringing credit to small enterprises who don't have the usual collateral but do have cash flow of their small business. And also some of our reforms in mobile banking, because we are an archipelago. There are many places in our country with no bank. In fact, 36% of our cities and municipalities don't have a single bank. And how do we reach those people? And the BSP has created a regulatory framework for mobile banking, for example, electronic money, that you can use your mobile phone to transact with an institution. So some of these reforms, regulations that we have put in place, help develop market solutions to really bring financial services to the markets that are unserved and underserved. And when we talk about unserved and underserved markets, these are the micro, small, and medium enterprises, which both the collateral registry and the credit bureaus will help access much needed credit based on some of their current limitations, no collateral or no credit histories. So this financial infrastructure is very important. Others, such as the agriculture, agrarian reform sector. So what are the interventions needed to provide access to these markets? We have, for example, in the BSP regulations on agriculture microfinance. But it is really beyond credit. It is also savings, insurance, microinsurance, for example, remittances. These are the suite of financial services that every individual actually needs. And right now, people are not enjoying these benefits. To give you some data from the nationwide survey that we just conducted, and these are just preliminary studies before we publish it. Actually, about 40% of Filipinos save, but 68% save at home. So can you just imagine that they are not enjoying the benefits of safely saving in an institution that is protected or that is regulated? For another example, a significant number, about 40% take out loans, but 62% of those who take out loans borrow from family and friends. And that's not sustainable, because sometimes they will lend you, sometimes they will not lend you. Or they go 10% go to informal lenders who charge very high rates. So these are opportunities for growth in terms of providing financial services for the private sector. This is a big opportunity, because what the pioneers in this area are seeing is that this is a market that needs the service and can actually pay for the service. So even if we think it is for marginalized markets, low-income markets, why are informal lenders thriving? Their prices are so high. So if we find the right products, the right channels that fit the needs of this market, it can be successfully done by the private sector innovating and delivering products, and the role of government enabling such innovation. So these are some of the basic thrusts of that national strategy, and we really hope to be able to implement these strategies to various agency roadmaps and also private sector initiatives to really bring basic financial services to all Filipinos who will need them and who will use them and who will actually benefit from the use of these financial services.
Thank you, Ms. Pia. Now we are opening the floor to Q&A. Who wants to ask the first question? Okay.
Good afternoon. Mikael Flores of Business World. Ms. Pia, in the 2014 annual report of the Central Bank, I think there was a mention of a plan to release this year a nationwide baseline survey on financial inclusion. May we just get an update on what's the latest, and what's the timetable? When do you target to release the results of the survey this year?
That is a very timely question. If all goes well, we can release it tomorrow.
Okay. can you just give us an overview of what the results of the survey contain, or what are the general points
Yeah.
or
Okay.
or results that are seen in the survey?
Okay, this will be the first of its kind, no, demand-side survey, because those who are following some of our financial inclusion indicators, we really rely on supply side, meaning the submissions of our banks. So our banks are telling us they are reaching this, or for example, cooperatives, but none from really the user. So this is the first time that we are having a nationally representative survey on the users, on the individual side. And it will look at all the components of financial inclusion, meaning we're looking at savings, loans, payments, insurance. So all the products. And we also look at access, meaning if there is an access point near them, what they prefer an access point should be, what their experience has been with an access point. So it looks at all dimensions of access. It looks at usage, meaning have they used services before? Do they want to? Did they try but not anymore? All those questions. And then in terms of quality, were they satisfied with the service? Was the pricing right? Did they have a bad experience? Was it addressed? And then finally, welfare, meaning did they improve? Do they think they will improve because they access service? So these four aspects of measurement, meaning access, usage, quality, and welfare, are all integrated in this survey. What we hope to see is that this will be the baseline. So since this is the first of its kind, this will be the baseline, and we hope to measure this on a regular basis to see if we really are becoming more inclusive. So the preliminary results that I told you about, the 43% save but 68 in the house, 47 have loans but 62 from families, and 10% from informal lenders. These are tidbits of preliminary results from that survey. So we hope to be able to publish its entire top line report very soon, as I said, maybe tomorrow.
To Mr. Colin, at present, the country still has no Credit Information Bureau yet, but President Garchitorena of CIC said by the end of December, we'll have at least 4 or 5, I think, reliable credit information bureaus that financial institutions can access. On the part of the IFC, what do you think should be contained, or what are the data that should be reflected, that can be useful for financial institutions in terms of assessing the risk in providing loans to potential borrowers? Thank you.
Okay. We as the IFC have been working with the Credit Information Corporation for a number of years now in terms of implementing what the CISA Act here has indicated that the CIC has to do. As far as best practice is concerned, they will be collecting. As you can imagine, this is quite a lengthy process of committing to the lenders to prepare their information on borrowers and on all loans. So currently the process is underway where they're collecting current accounts, and that is being collected from a number of banks already. And as there's going to be a process where the CIC is opening its doors to get the data in from the submitters this month. And the idea is to increase the contributions and submitters by the end of the year. In parallel to that, there is an initiative to enable the accreditation of special accessing entities, which will be those private bureaus, to be able to access information from the CIC and to then add value on top of that information, such as credit assessment, credit scores, fraud, products, etc. So the objective, as you've pointed out, is by the end of the year to have that accreditation process in place, to have a number of institutions contributing information to the CIC, and so therefore to be able to start pulling the first credit reports by the end of this year. Now that is quite an optimistic aim. It is not an easy process. I mean, when we see these developments globally, these can take easily between 2 to 3 years before you see any significant amount of data being submitted You've got issues around data quality, not only on the borrower's side mainly, the information on borrowers. As you can imagine here, Philippines, you don't have any national ID. So the process of capturing data about individuals, about their addresses, about their dates of birth, about some other information is quite a challenge. There's disparity in terms of the capability of financial institutions. Some are very much capable, the larger banks, etc. But you've got a middle tier to lower tier who have very little capacity. So it is quite a challenge that's going ahead. But good progress has been made since the passing of the Act. And we're at the stage, as I said, of the information's being received. Some has been able to be processed and actually loaded onto the CIC database. And some are going through the process of error correction and making sure the data is correct and accurate. So, that'll give you a bit of an update where the Philippines is at. There are economies close by here in terms of Malaysia and Singapore, for instance, Vietnam, who have had these credit bureaus in place for a long time. But however, Philippines is starting from an environment where you've had bureaus that have been not regulated, that are actually already operating. So this has given a bit of an advantage. So you're not starting from scratch completely as some other markets have had to do. So we're very, we're looking forward to the end of the year when that process will be in place. And lenders will be able to get both positive and negative information. And according to the CISA Act, it will be both from the regulated entities as well as the non-regulated. Now, how long that I wouldn't be too optimistic to expect everything to be there by December. But it certainly will be something that progressively increases over time. Okay.
Okay, thank you. Who wants to ask the next question? Perhaps Ms. Griselda, after
Legal and regulatory framework are not there, it's really almost impossible to pursue it. With that being said, the Philippines has a very old law governing movable collaterals. So with that being said, we're at the stage wherein we're really trying to bring together the relevant stakeholders and really have to have a concerted effort to move forward with the legal reforms. Of course, there are certain things there are certain aspects, like for instance, putting up the registry and have some kind of a registry for movable collateral. There's an effort going on by the Land Registration Administration with gearing towards a web-based environment. However, again, given where the law is right now, there's only so much you can enhance within the system. That really that leads to really a best practice web-based registry. So with that being said, again, we're in the process of working across various stakeholders. Hopefully, we can work towards that effort of really achieving a true comprehensive secure transactions reform.
Okay, are there more questions from the floor? Okay, just a brief recap of what Mr. Colin and Mr. Griselda have said. For your better appreciation, a credit bureau is a central registry of credit information of potential borrowers, credit and payment history registry. And why do we need that? We need that so that financial institutions like banks will be more comfortable at lending money to micro, small, and medium enterprises. Because without sufficient credit information, banks are usually more inclined to lend only to large enterprises. So there is this push for APEC economies to pursue the establishment of credit bureaus across the region so that micro, small, and medium enterprises will be able to access financing from banks and other financial institutions. And movable collateral registry, it is also a registry of records of collateral aside from buildings and land, because normally MSMEs do not have land and buildings, so they have other forms of collateral. So if banks have information about that, they can also be more comfortable at lending to micro and small and medium enterprises. So perhaps our speakers can share some of the best practices in Asia-Pacific region as far as the pursuit of financial inclusion is concerned. Which countries are doing some of the international best standards as far as this agenda is concerned?
Happy to make some comments on the credit information side. With credit information, I guess you've got to look at the balance of the information that you hold or that you want to retrieve in terms of credit assessment. You want to get a lot of additional data sources. As we said, you don't want to just get bank information. You want to get information about other types of borrowings. But you've got to balance that with the right of the individual to make sure that their privacy is respected and that their consumer rights are actually complied with. So there is this aspect. And I guess when we look around the region, you've got the likes of Malaysia and Singapore and Australia, who have had, I guess, best practice to an extent. When we say best practice, it's an important one to try and define. There's no such thing as one best practice, because there's variances of that, various approaches that different countries have taken. For instance, the Australian setting have come from very much a privacy setting, a consumer rights setting, while in Singapore it's come more from a monetary authority perspective of making sure that there is enough information for the lenders to make good decisions. So having said that, most of those criteria have been met, where the information is readily available. It's both positive and negative. It's coming from all sectors of the market, not just the regulated but non-regulated. It's accessible by the public. So the public has a right to get an access to their file, to get access to the information once a year, typically for free. And if there's any issues or any inaccuracies, they can then come and get that resolved. So there's a published dispute resolution process in place. And that whole environment is usually very well supervised by the regulator that sets the rules and regulations around what can be done for what purpose. For instance, this credit information is used for credit assessment and credit assessment only. It cannot be used for marketing purposes. So nobody can just come to the credit bureau and ask for information about, give me a list of all 25-year-olds who don't have a credit card that I want to be able to market to, etc. So these sorts of other uses are not allowed. So there's a permissible purpose that has to be defined. And of course, there needs to be a regulator and a supervisor that supervises that whole ecosystem. So when we look at that, that's been fairly well established. There are some other economies similar to Philippines who are establishing them anew, such as Indonesia is another one nearby who is going through that whole process of reassessing. They have a registry that's run by the central bank, but it's really primarily there for supervision purposes and not for credit assessment by lenders. So there is a need for a different model to be adopted there, where there's a blending of the public and the private sectors involved. And so, the whole environment of Asia is a whole range of some who do not have any credit information systems in place to those that are fairly well advanced.
So, I guess I just want to clarify. I guess we should put it in a broader context. So, Credit Bureau as having a registry in place. So these two aspects are part of the financial infrastructure program of the World Bank to promote financial inclusion. So we have to keep that in mind. It's not about just creating the registry. It's creating a sustainable ecosystem, a credit bureau ecosystem for that matter, or a secure transactions ecosystem that facilitates financing through the value chain, through the SMEs to increase access to finance.
Any more questions from the floor? I am really eager to extract a lot of information from our source speakers because they have a lot of good news to share. So please pardon me, but I will have to ask Ms. Pia. The Philippines is considered as or is internationally recognized by some international organizations as having one of the best frameworks, regulatory frameworks as far as microfinance is concerned. So can you cite 2-3 examples of these regulations that help bring about financial inclusion? And if you may, if you can share some, are there efforts of the BSP to further enhance the regulatory framework for microfinance?
Okay. Yeah, thank you for that. So yeah, as I mentioned, there has been some recognition of our policy and regulatory environment for microfinance and financial inclusion globally. For example, the Economist Intelligence Unit has for 5 years in a row ranked the policy and regulatory environment for microfinance of the Philippines as #1 in the world, together with other. The Philippines is ranked favorably there as being the 3rd in the world and the 1st in Asia in terms of the conducive environment for financial inclusion. And some of the things that have been identified here are the BSP policies, for example, in microfinance, allowing a wide range of services. So banks are allowed. We've set the framework for banks to offer micro deposits, for example. These are deposit accounts that have no minimum balance, no dormancy fee. So addressing the usual obstacle for the unbanked to open accounts. Some of them are scared to go to a bank because their charges will eat up their very small balances. We have recognized the products such as, for example, microinsurance. The Department of Finance has worked with the Insurance Commission to define what microinsurance is. An insurance product that has a very small premiums, only a small percentage of the minimum daily wage, about 20 pesos premiums, that can give you a coverage when there's something that happens, an emergency that happens in the family. We have set regulations to allow our banks to distribute this kind of insurance product. Before, it was limited to, insurance products were limited to be distributed by the big banks only. So now even the smaller banks can do this. Some reforms in what we call micro banking offices. So, we have areas in the unbanked areas that are, very small population, very hard to reach. Banks will not set up offices here because it does not make economic sense to do that. But we've allowed them to open a small office, for example, just a rented room with 1 or 2 bank employees to provide a range of services to the unbanked sectors. And right now we have about nearly 500 of these, what we call MBOs, and over 60 municipalities that did not have a single bank before are now enjoying the presence of a bank because of these MBOs. So these are just some examples. Finally, one last one is again on the mobile banking and electronic money. We have in the country about 9,800 banks. That's including all the branches that you see here and in other areas. But because of the electronic money regulations, we have about 10,000 agents. That these are agents are small drugstores, big grocery stores that can do cash in, cash out of electronic money. So when you have electronic money, for example, it's in your mobile phone or it's in a card, you can now go to an ATM or you can transact that electronic money and send it to an account. Now that is a transactional account, it's not a deposit account, but we think it's the first step for those that are in the unbanked, those who are not reached by physical structures, to be touched by the financial system through these transactional accounts. So these are some of the policies that we have set in place that is being recognized. But as my colleague also gave from World Bank is saying, it's not just the regulations. The regulations need to translate to the private sector taking advantage of these regulations and developing the products and going to the unbanked markets and really innovating. And then so we will really see the benefits only in increased usage if all these components are set in place. I think the reason why the government is entering into that national strategy is in recognition that yes, we have good frameworks in place, but we are still a long way from our vision of really having access to financial services for inclusive growth. So we hope to see better figures and better stories in the years to come.
Okay, is there any more question before we ask our speakers to give their closing statements? None? Okay, perhaps to our speakers, for your closing, perhaps you can state where do you want the APEC economies to go from here, say over the medium term, as far as financial inclusion is concerned?
I guess in the area of secured transactions, we have proposed in the context of the Cebu Action Plan for the APEC economies to commit to a set of principles. We recognize that there may be, it's not possible to mandate it, but at least have some guidelines. At the same time, leverage on each other's knowledge to be able to push forward with the right reforms. And lastly, to have some metrics or in terms of milestones or objectives that they want to reach. Because if you don't have any metrics in place, what cannot be measured cannot be achieved.
I guess I won't speak too much. I think I've said too much already, but in the context of APEC, I think the platform could also be used in exactly what you mentioned about knowledge exchange and learning, because a lot of the good practices, you know, I also will not say best practices, but that we could learn from the other economies and put in place in our own economies in terms of financial inclusion. And also, the Cebu Action Plan recognizes that financial integration and financial inclusion can be something that is you know, mutually beneficial or complementary in terms of policy objectives, because access to financial services, for example, of an enterprise can benefit now from maybe a regional value chain, and you know, he will have access to markets, access to more financial services from the other economies. So just to reinforce the tenets that are currently now in the Cebu Action Plan in terms of the inclusion and integration interface.
Yeah, as far as the credit information bureaus are concerned for the APEC economies, it's really, I guess, sort of two steps. The first step is really to try and get an agreement among all of the APEC jurisdictions as far as the, I guess, the level of credit reporting is fairly uniform across the different jurisdictions. And by that I mean some countries have got no credit reporting and some are very well advanced. So until we can get some uniformity within that, it doesn't allow us to be able to then get to the position that Pia is saying, where there can be an exchange, especially when you need to go across borders and across countries. So you've got people who are moving, for instance, from one country to another for employment or for family reasons. They want to be able to take their credit history with them and to be able to then go and open an account and start a life afresh in another country. And similarly, when you've got businesses who are doing export or import, they want to be able to know what those suppliers and who their customers are. And again, the exchange of information on those SMEs and MSMEs across borders is important. But until we can't get to that stage until we get some kind of uniformity. So there is a recommendation that they look at the general principles that we as the World Bank have worked with the Bank of International Settlement to put together in 5 main areas. And if that is the case and they can work towards that, then that provides a good foundation for this cross-border of information that would be useful both to individuals and SMEs in the future.
Okay, thank you very much. On that note, we are officially closing our press conferences for today. Thank you very much, everyone, for your participation. I'll see you again tomorrow.